Do you have children? Are you worried about their future? Are you worried about how will you actually give them higher education and the best education possible with the education costs rising like crazy? Are you worried who's going to take care of them when you are not around? So if questions like these keep haunting you, this video is for you, my friend. And today is Daughter's Day, and we thought why not bring to you a video through which you can actually give them a very secured future, even in case of an eventuality when you are not around to take care of her. So I'm Swati Singhania, daughter of Samar Singhania, and we are unlocking financial literacy for you. So should we start solving yours and everyone's problem here? So I personally believe, when the problem is very, very big and you're not being able to solve it, start breaking it into smaller pieces. And when you start breaking it into smaller problems and start solving one each, you will see very slowly you found the solution to your problem. So here the problem in question is, how can you actually secure your child's future? How can you ensure that your daughter has the best future possible, whether you're around or not? Because obviously none of us can actually guarantee our lives. So in situation like this, let me break the problem further into another smaller two solutions. There could be a first situation where you are actually blessed with a lot of assets. So let's say you have ancestral property or properties and assets which have been transferred from generation to generation, or you have been able to create that amount of asset base for you and your family. So you have a lot of property, gold, shares investments, and various other investments. So if you have been able to create such a great asset class, I think the first thing you should actually plan about is creating your will. You may think that I have a lot of life with me and I'm very young right now and I will plan it after 5-10 years. Super, great. But what will happen in case that particular hard day strikes? There is actually an eventuality. We can actually never plan for it. So a good thing is to actually start writing your will. There are two steps. First of all, start writing down the points that you would want to. So how would you want to divide your property? How much you would want to share with your spouse, with your children, with your parents, with your other relatives, with any other person that you would want to share your property with, or you would want to actually donate a particular share of that property. What are the pointers that you would want to? And then get in touch with a good lawyer and try to get a very strong will made. And do not forget to get it registered. As I keep saying, it doesn't cost much, but it's a great thing to do. And in your will, do not forget to include the fact that till the time your child attains the age of 18 or 20 years, what do you want to do with the property? Who do you want to be the trustee of that property and to take care of the property on behalf of your children? So these are the two things that you have to do. If you already have a great asset class and you really don't need to, you think that financially at least I don't need to worry about the future of my children. But in the second case, if you are the sole bread earner of your family and you think your income is extremely important for the survival of your family and for the well-being of your family, I recommend you to actually start doing a proper financial planning for your children. See, children are not just a part of emotions, it's also a great responsibility that we have taken up. And it is also a responsibility that we have towards the world, because that is something that you are going to leave behind when you are gone. It's very, very important that we leave behind a very, very good child here in the world, also so that they can have a great future. In the financial planning, you can start with setting up mutual funds in their name, where you can actually start doing SIPs. You can start making gold investments. So I think you can think that every Diwali or every New Year, I will give her particular amounts of gram of gold. So, over the years, over 15-20 years, it just accumulates and become a very good amount. Sukanya Samriddhi, which I think is a very good investment tool, especially for daughters. This has been started about 3-4 years back by the government. And as compared to all other fixed deposits, this gives the maximum interest rates currently, or at least one of the maximum ones. You should start planning for these things if you've already not done that for your son or daughter. So Kanya Samriddhi is obviously available only for the daughters there. There is one thing that we have to keep in mind. All these tools that I mentioned you, in case of eventuality where you are not able to pay the premium anymore, whatever amount you've already deposited, that amount over a period of time after interest and returns have been added to it would obviously become a huge amount of money, and it would be a substantial sum that you can leave behind your child. But the maturity value which you had thought and planned for will get affected. So this made me thinking to start looking for a product where, in case of eventuality, what is that one product which can assure the maturity value even if all the premiums are not paid in case of an extreme eventuality, which is the death of a parent. There's only one product I could find of, and which is child plan or child insurance plan, and we are going to tell you in detail about this particular product because I think this is a non-negotiator when it comes to your daughters and your sons. And I think because it's Daughter's Day, if you've already not done this planning, you have to start doing it today. And this should be your starting point. So do not forget to watch this video till the end, because we are going to share some very good details about a lot of products and especially this child plan. And we're also going to give you a lot of bonus tips and also going to share as to what great things our parents did for us. So for this child insurance plan, so I thought, why not bring to you an expert from the field who is also a doer and a mother. So people, let me introduce you to Ms. Sweta Agarwal. She is involved with a pan-India insurance broking house called Ideal Insurance Brokers Private Limited, and they have offices, I don't know in how many cities by now. But more important is that she is an expert of insurance, and second, she has two lovely daughters. And third, that she is a bread earner. So I thought on this Daughter's Day, what better to ask a daughter as to how she's planning for her daughter. And also because she's an expert, she can probably share knowledge of her expertise about this awesome product that we are going to tell you about. So guys, before we go ahead, please do note that this is not a paid advertisement. I have just tried bringing her to share her knowledge, and I'm actually throwing her a treat for that. So guys, you better make use of it. So let's quickly start understanding what really is this product called Child Plan, and what are the benefits, what are the things that you need to take in mind. So Shweta, what really is Child Plan?
Okay. Hi all, I am Sweta Agarwal, Director at Ideal Insurance Brokers, a 15-year-old firm. And as she just mentioned, I have two little daughters, and I always tell them, I did not give you the gift of life, life gave me the gift of you. And they may soon outgrow my lap, but they never outgrow my heart. And this is not true only about me, For every parent, a child is the topmost priority, the most important part of their life. Even the smallest of the happy moments will depend on them. So while trying to maintain a balance between these emotions and practical life, managing the savings and spendings often become a tricky issue. The upbringing of a child requires good financial planning, and the sooner we begin, the better it is. This is where a child plan comes into picture.
So guys, for your future, to manage, to accept the fact that yes, although you are planning for the best, but you may not always be around for them, and it is actually planning for that possibility of you not being there. So child plan basically is a product which comes into place exactly at that point of time, where, as I said, this is one product where even if you stop paying for any particular reason, which she will be sharing, the maturity value will not change. So it's a great, if I may say, it's great guarantee for your children's future, right? So Shweta, who really should take this child plan, and when should you take a child plan?
Right, so before I answer that, I would just mention, child plan is an insurance cum investment plan. So it is combining features of both, which helps you prepare for the child's future financial requirements. So, and it creates fund over a period of time and pays you at maturity or towards the mature.
Right.
For covering expenses like marriage or higher education. And if you see, this is the most crucial period of a child's life, between 18 to 25. So that's when the child plan normally matures. So it's providing financial security during the most crucial period of the child's life. So who should take a child plan is the parent who is bringing up the child, who is responsible for the child's upbringing. and these plans can only be taken for a child between 0 to 15.
Shweta, just to pause you, you mentioned higher education, and obviously, guys, we all know how important is education. We in this channel, how important is education, even if you've not really studied, but to have overall knowledge. And obviously, we always want to give a better future to our children than what we got, probably, or whatever best we can at least do. So, education and security, I think, becomes the topmost priority for today's parent. So, how does this investment cum insurance plan helps us planning for our child's education, or maybe higher education for that matter?
Right. So education, the rising cost
Right.
of education becomes a great constraint in the most crucial part of the child's life. So this child plan will build up the corpus to pay for that money when the time comes. So as I was mentioning, you can decide on a lump sum amount, say 1 crore, 2 crore, or 50 lakh, or 20 lakh, whatever the sum you have decided.
Right.
And based on that, we do a back calculation of how much the premium can come to now, and we create a policy based on your needs. So this not only helps you pay for the higher education of the child, but in case you want to avail a loan against your education, this will act as a collateral for that.
Okay, guys, so but what she just said was very important. I want you to please make note of these two things that she mentioned. One, it is a forced saving. It is a habit that you're creating in yourself so that you do not over pamper your children. The savings that you do, you are investing kind of for their future also. And second, in case there is any eventuality which strikes in and you really need some amount of money, you can actually use this policy as a collateral to take loan. So it can work as a security for you to take any short-term loans that you may want from the bank. So I think these two are great points. So guys, I hope you've made note of these 2-3 points. But so Shweta, in addition to savings, in addition to being a great flexibility product, and obviously planning for the great education or any future plannings that you need to do for your children, what are the other benefits that this plan could provide to a parent?
So like all other life insurance plan, it gives you the benefit of taxation. So the premiums paid against the child plan and the maturity amount received against the child plan are exempted from tax. Then some of the ULIP plans also provide you the flexibility of partial withdrawal. So you can withdraw a lump sum before the maturity of the policy in case of the consequences in the family, in case of emergencies in the family.
Right.
And finally, the most important part, in case the parent does not survive, who is the proposer in the policy, you do not need to pay the future premium. The future premiums are waived off as if the insurance company is paying the premium, and you still get the maturity amount as was decided earlier. This is a very important point.
Yes, I think so, guys. I think this last point that she mentioned, one particular benefit which makes this policy a winner or makes this product a winner is that in case anything happens to you, you don't need to worry about the premium. The insurance company will pay for the premium. So it is like you are creating your own clone in forms of a policy, okay? Or in other words, you are actually just creating a backup for yourself. If you have not already taken this policy for your children, you should think about and consider this for that matter for sure. But before we go to difficult questions, I think there's one more question which is coming to my mind, Shweta. Is there a particular minimum amount that everyone should at least plan annually for paying for these insurance premium? As in, a basic minimum that you must pay for this child plan?
No basic premium as such. It depends on the amount of corpus you want to leave for your child or you want to create for your child. So based on that, suppose you want a 50 lakh or a 1 crore or a 5 crore corpus. So we do the back calculation and we tell you this yearly premium will create that corpus in say 18 to 20 years, which is normally the policy period for a child plan. So if we are talking about say 1 crore in 20 years, a premium of somewhere around 1 lakh 50 to 2 lakh would do, assuming that you start the policy before the first year completion of your child's
Correct. So guys, she mentioned 20 years. So if you start anywhere in the first to second year of your child and you are looking at a 1 crore corpus, if you think that the education will cost around a crore after 20 years from now, so you can think of a premium of anywhere around 1.5 lakh to 2 lakhs annually. And I think there are options available these days where you can convert them to a monthly EMI also. So if you have a fixed salary, it's a good idea to actually make it divided by 12, and so that it just gets deducted from your salary altogether, and you really don't have to plan for that premium in addition. So this kind of covers all the basics of this insurance policy. So Shweta, now I'd like to ask some very difficult questions from you. And guys, see, insurance is basically a product which we plan for the worst case situation possible. But we only mostly talk of things like in case something happens to your life. But these days there are too many other eventualities which can happen, and I think we as a society should be matured enough to discuss these questions also. So Shweta, these obviously this is a child plan, so you take it together for your child. What really happens if the parents decide to split up, or if they divorce? So what happens in case like that?
So the policy will not be affected. The policy continues as it is. The proposer still remains the proposer, whoever the father or mother the proposer is, and at the end of the policy period, the child still gets its maturity.
Okay, so now it could also be that there is a single parent, so it really doesn't matter, right, who finally takes care of the child, whether it's the mother or the father.
Yes, in fact, when it comes to a single parent, it becomes all the more important because there's one person who's looking after the finances of the child. So similarly, the single parent can become the proposer and take a plan for his or her child, and the policy features remains the same.
So guys, again, do remember this can happen to any of us, and it's all about planning for that. Eventually, it's all about planning for that worst case situation, because when you go through an emotional crisis like this, where the couple is splitting up, there's a lot of financial crisis also which at times comes in, and you would not want your child's future or their life to suffer even if you are decided to split up, which is completely okay. But then the idea is their life should continue to go on as it is. So even I'm not saying you should plan for this because an eventuality like that may happen, but then let's accept it. Yes, it may just happen to any of us. So Shweta, the next difficult topic is a lot of time these days parents are coming up and adopting children. And it could be because of need, or it could also be because of choice. So if a couple has decided to adopt a child, can they also take the same policy as they would have taken for a child that they have given birth to?
Yes. So adopted, I'm assuming all the legal formalities.
Yes, obviously, yes.
So it applies to them also. The adopted child becomes your own eventually.
Right, the same.
The policy
Okay.
remains the same.
Okay, now, so in addition to adoption, I'm just extending that question. I have seen this at least many times, that both the parents go through a difficult time, and for some reason, let's say because of an accident or anything, they both don't survive. Now the child is kind of adopted by one of the family members, so by one of the sisters or one of the brothers. Again, it's like adoption only. So can the aunt or the uncle, or let's say even if there's no eventuality like that, can I gift this policy to my niece or nephew for that matter?
So there's something called insurable interest when it comes to insurance policies. So we assume a child has his insurable interest only by the parents or by the grandparents. So you cannot take a policy for niece or nephew, but the parents or grandparents can take a policy. And we were talking about the parents not surviving. So assuming the parents had foreseen this and taken a policy before something happened to them, the policy would still continue, future premiums being waived off. So he still gets the maturity at the end of the period, no matter whoever he's living with right now.
Okay. So guys, just something that I would want to share here, that in case you have kind of adopted the responsibility of a child in your family for an eventuality like that, do not go ahead and buy an insurance policy until and unless you complete the adoption formalities, legal formalities. Because until and unless you are legally the parent or the grandparent of the child, you really cannot buy an insurance policy for them. And even if you buy an insurance policy, in case when the policy has to mature, or in case of another eventuality, the insurance company will actually do some due diligence and their own research work. They may actually reject the claim altogether. So don't go ahead and, because of your emotional outburst, take that insurance policy for them. Do that legal formalities first and then go ahead and buy. Until the time, you can always start saving in a mutual fund, start saving in a fixed, setting aside that money and buy that insurance policy when you've completed the insurance policy. So I think, guys, this is all difficult questions that could come to my mind. The only last thing which is coming to my mind is there someone who should not buy this child plan? Like, don't take it.
So, though we recommend it for every parent to take a child plan, those who are not a parent without a child definitely cannot take a child plan.
Yeah. So, guys, if you've just recently been married and you started planning for a child, or even you're a single parent and you're wanting to adopt a child, start planning for it, but don't go ahead and buy an insurance policy. Only buy the insurance policy when that particular person is there in your life. So that's something that you should always keep note of. So I'm super happy about this session because I think we have been able to touch upon some very difficult questions. But our session with Sweta will not be complete unless we really ask this daughter as to how she's planning for her two daughters. So Sweta, tell us a little bit about your daughters. What are they called and how old are they?
Right, so my elder one is 8 years old, we call her Sanvi, and the younger one, the naughtier one, is Ashi, she's just 5 years old.
Wow, such a lovely age to be in.
And even difficult, but it goes hand in hand.
Yes, okay.
So when they were born, being in the insurance industry, being the more knowledgeable about the plans, we did take the child plan for them, each of them, before they turned one, so it was kind of a gift to them at their first birthday. Then we also have mutual funds for them, which we started again before they turned one, and we put some monthly savings into it, SIPs, and we plan to keep on increasing the amount of SIP as and when we can.
Wow.
Apart from this, there's another plan called Sukanya Samriddhi, which is specifically for daughters. So if money can be put into it, you get a decent amount of return, more than the normal fixed deposit. So that is also there.
So guys, currently the interest rate on Sukanya Samriddhi is actually 8% and plus, which I think is a fabulous interest in today's times. And if you are blessed with a daughter, this scheme is a must scheme. We have to do a separate video on it, otherwise we can continue to talk on it. But we should appreciate Sweta on the amount of planning she's done for her daughters. So before they turned one, so almost like the time she started planning for a child is the time she started planning for the insurance plan also. So that's the amount of thoughtfulness that you can actually start having. I always say having a child, giving birth to a child is not just a part of emotion. It's also a big responsibility that you're actually leaving away your mark in the world. So what kind of mark would you like to live back at? So I do hope a lot of your questions must have been answered. And in case you want to reach out to Sweta, I will leave her email ID in the description below. And guys, you have to like our channel, you have to subscribe to it, and you have to tell us what is the best thing that you liked about this video. And before we go ahead, we have a bonus thing for you that you can actually even ask Sweta on our comment box, and I will ensure that she answers your questions. Also, before we let Sweta go, Sweta, what would be some plans that you can, immediately on your offhand refer your favorites of child plan that you can leave with the viewers here? So yes, Sweta.
So there are many traditional annual-based plans. We from our side always recommend you to go with the traditional plans, and some of the names of those plans are LIC Jeevan Tanoon, then there's HDFC Youngstar Udaan, and Bajaj Lion Generous Shop. These are my favorites.
Okay, so that includes LIC, HDFC and Bajaj. So whatever be your favorite insurance company, you can go ahead. And guys, I said this is more like an info video so that you can secure your child's future. So that's Daughter's Day for you. So guys, happy Daughter's Day. And see you. Bye-bye. Take care.